So listen, I'm about to show you the exact investor message fit formula that separates advisors who book a bunch of meetings and nothing ever happens from those who can actually get into meetings and close millions, hundreds of millions, and even billions of dollars for their clients. If you don't already know me, my name is Alex Zastry. I started a capital advisory firm at the age of 22 and have subsequently brought in members of my team that have raised well over $80 billion combined. On this channel, I help agency owners, financial professionals, and sales professionals learn how they can upskill themselves and create a capital advisory firm that does 7, 8, and even 9 figures a year. Let's say you have the perfect client with just an absolutely fantastic business. The reality is that if you can't nail investor message fit, the meetings you book them are for nothing. You'll burn through weeks, maybe even months, booking the meetings with investors that know absolutely nothing about the business, they don't care, and they'll sit there, nod their head and smile, and at the end of the call, there are absolutely zero follow-up steps. Meanwhile, someone who understands this formula will come in and get a deal done in as little as 6 weeks. The difference between making $5 million plus in success fees versus literally making $0 is simply investor message fit. And that's exactly what I'm going to break down for you today in this video. The first part of this is the investor segment framework. What this basically means is finding the investors that most precisely match the segment of the market that your client is in. So whether or not you're going out to clean tech VCs on an oil and gas deal, as an example, you need to be able to match the oil and gas deal with oil and gas investors. For a long time, this might have been pretty difficult to do. There's pretty robust databases out there like investoroutbound.com that allow you to precisely match those investors with your deal almost immediately. The other thing that's come to market very, very recently is GPT-5 allows you to drag and drop your CSVs with investor lists that you might get from PitchBook or Preqin or CapIQ or Apollo or wherever you're getting your more general broad lists. And you can tell GPT quite simply, give me the top 10,000 people that most fit this opportunity, and then you can drag and drop the client's deck in there. GPT will go through that entire list and spit out the most relevant investors directly to you so that you know that you're going after the right group. The other thing that's really important here is check size. People don't realize that if someone's writing $50 million checks on a consistent basis, they're very unlikely to write a $1, $5, $10 million check just because they like the deal. So even if you line them up with the right segment of the market, if it's still the wrong dollar amount, once again, you're not going to the right allocator. And that's something that you need to understand as well. Now, the message framework, this is super important. You need to go through the client's information and figure out the 1 or 2 super highlights from the deal and use that to craft your messaging in order to go out to market. Whether you're using LinkedIn outbound, email outbound, or you are direct dialing potential allocators, you need to have that story down pat and know off the top of your head every single time the most important facts about that business. As you get more involved with that client, as you have more meetings, and preferably before any of that, you should understand the business's ins and outs, but at minimum, you need to know the highlights in order to perfectly craft the actual messaging that you're going out to market with. The other thing is that it needs to be as concise as humanly possible. What I'll do is show you an example of email copy that we use in our business in order to be able to concisely gain the attention of prospective investors. The major difference that you'll notice from the copy that we use versus the copy that I've seen other advisors use is that we're very to the point. It's 3 to 4 lines at maximum. And once again, it's going over specifically the highlights of the deal. No investor is sitting there and going to read through an entire email off of the first point of contact. It's just very unlikely, which is why we keep our emails as concise as humanly possible in order to gain their attention, gain their interest, and ultimately get them into a meeting with the client. We're about to get into the channel strategy portion of this video, but before we do, I'd be remiss if I didn't tell you that if you like this kind of information, these kinds of videos, and you're interested in how you can start a capital advisory firm similar to mine that's at 7, scaling to 8 figures right now, what I would recommend that you do is go down below and book a call directly with my team. The link will be in the description for you to actually find out more about starting your own capital advisory firm. And if you're already in financial services, you already have a capital advisory firm, or maybe you work in financial services for another firm, I promise you the consulting that we give and the outlines and infrastructure that we've built here, using that within your own existing infrastructure will also help you scale far beyond your wildest dreams. So I really do recommend you go down below and book a call in the description. Let's get back into it. One of the other most important portions of this is the channel with which you hit investors. So there's kind of three main channels that we use internally in order to get first touch point with investors. Number one is email. Okay, so we'll run scaled email campaigns. Number two is LinkedIn. We do run LinkedIn automation from clients' accounts in order to be able to reach out directly to investors consistently and have it look like it's coming from the client. That's really important. It looks like they're out there doing their own work, and that has a really, really high response rate compared to email. It's much slower. You're not going to get as many messages out, but the quality is going to be really high. So when using that channel, make sure that you understand the necessity for your lead lists to be shorter and much more accurate. And if you want, you can use that GPT that I told you about earlier. Number three is phone calls. A lot of guys in the advisory world are scared to pick up the phone and start dialing. Use GPT. Find the 30 to 40, 50 top allocators for that specific deal based on the previous deals that they've done. Pick up the phone, dial them. This is going to be the absolute best way that you can be effective. I have all of the frameworks and how exactly you can do this step by step in the most efficient way humanly possible, all outlined in the Capital Advisory program. So again, I would recommend checking that out if you can. The channel is super, super important. Who are you speaking to and how do they like to receive messages? This is going to really educate the way that you operate. If you're trying to reach a VC, picking up the phone and trying to dial them is not going to work. They don't give a shit and they'll be annoyed. But if you're going out to private credit, these guys are hungry for deals. So picking up the phone and calling them is likely the best channel to use. Understanding these 3 or 4 sometimes different channels to use is really, really important because it's how you will have success and not waste your time, energy, and money on channels that are just not appropriate for your ideal investor for the specific deal. Step 5 is the actual due diligence process. Now, you want to have really good full data rooms for each of your clients in order to make sure that all of the information an investor needs is going to be in there. You do not want to have to go back and forth with the investor on little items that they need constantly. Now, when you start out, you're going to want an investor VDR. I actually have kind of a base one that I can show you guys. So you'll see here that we have a ton of different sections. You want to make sure you have your corporate and legal, kind of outlining the corporate governance, any of the board resolutions, all of kind of the basic stuff for the company. You want to have the capital structure. How is the cap stack actually set up currently? Any of the legal documents involved. You can see here on the left a little bit more information on all of that in terms of what kind of documents you would need available for due diligence to go through really, really well and quickly. This is actually a sample that we show clients prior to engaging them for VDR buildouts. And so this is exactly the stuff that we put in there. Now, as you're having these conversations with prospective investors, you will notice that it is very likely they will ask for additional things. That's fine, but just make sure that you're consolidating it into the VDR that you already have so that as other investors are going through, you're able to really, really have all of the information that they're going to be looking for. The other thing, so here you'll see investor deck, product and technology goes over kind of the product and the tech behind the deal. You can show them a little bit about the customer information, what the sales numbers look like, any partnerships or the channels that you use, and then human resources as well. So this is kind of just a baseline that we show our clients prior to going through. This isn't like a real one for a client. This is just kind of sample. The other thing that is really important to understand during that due diligence process is that speed is everything. It's so easy to get caught up in going back and forth with a prospective investor, just trying to get the NDA over to them that they're going to need to sign to get access to the data room. You need to make sure that all of these various steps of the process are as concise as possible so that you burn as little time as possible. As in anything, time kills deals. You need things to be fast, have your documentation ready. Usually we'll just ask the prospective investor to send us their NDA so that we don't waste a bunch of time going back and forth. Makes things cleaner, makes things easier. And as much of this stuff as you can kind of have lined up and SOP'd, I would recommend. Again, in Capital Advisor, we show you exactly how to do that. So that's it for this video today. What I really recommend that you guys do, if you're interested in how you can make 7, 8, even 9 figures a year running a capital advisory firm or an investment bank, ultimately, make sure that you guys click right here and watch the actual video on me breaking down step by step the process on building out a capital advisory / investment banking firm. If you guys are already in finance, you're already financial professionals, I'd be more than happy to help you guys scale up your existing efforts and get out to more people, both on the deal origination side as well as on the allocator side. And if you're looking to acquire a business, then the systems that we use are super, super helpful in doing that too if you're in M&A. So regardless, I really appreciate your guys' time today. As always, I'm Alex Astry. Thank you for watching.